Well, welcome to today's edition. Today we're going to talk about a brief topic called substance over form. Thank you. Please thank you for watching, and then don't forget to subscribe for us. And you can share the video to your friends so that it will be helpful to your friends as well. Good. Thank you. Now let's go straight and then talk about substance over form. It's a very tricky concept in accounting or financial reporting that you need to appreciate it very well. So now be with me and then let's do it. Substance over form. Good. Substance over form. Basically, what's the meaning? It's a concept in accounting. Usually guides the faithfulness of accounts. If you want to report faithfully, then the transaction should be the substance but not the form. Now, what is substance over form? Now, with the substance over form, it basically talks about, it's a concept in accounting. It's a concept in accounting. Concept in accounting. That talks, or that states that the economic reality, economic reality, into brackets, the substance of a transaction should be recorded, but not the legal form. Wow, legal form. So basically, that's what we mean by substance over form, meaning the economic reality of a transaction should be recorded in a books, but not the form in which the transaction took place. So please take note, that's the substance of a form. So for every accounting transaction, there will be two sides or probably two forms. When you say two sides, not the double entry, that's the entry, debit and credit. Aside the debit and credit, there's another two form of every transactions. So that is it. Now let's see this. To report faithfully, the transactions in the books or the transactions should be recorded in the books at their substance, but not the form. So now be with me, let's pick some few illustration. Now that we know the definition, let's pick some few illustration examples of substance over form. This is a very short lecture to just walk you through substance over form. Good. Now, each and every accounting transaction have two form or two sides. So good, let me put a transaction here. So transaction or examples. Good. Then here is the legal. We also call it the form, or I call it physical. Good. But please, that does not mean the economic reality or the substance, the spiritual form. No, not at all. Then I also call it the package. Wow. Package. These are my terms that I've used to explain them so I can get it into detail. Now, substance, we call it economic reality. Economic reality. Sometimes how we see the thing, that's not the actual content or the actual detail or the reality of it. So you have the physical version of the transaction, what you can see, oh yes, but the reality of it is the economic situation. Good, or the substance. So you also call it substance. Okay, then I also call it content or the actual. So these are the names. So every transaction, there is what? Legal form of that transaction. And then there is what? Economic reality of that transaction. These are the two. So anytime there's a conflict between these two, the legal form is materially different from the what? From the substance form. Then whatever the substance should say should outweigh or should outperform or over the form. So we call it substance over form. So whatever the requirement of the substance or whatever the requirement says or whatever the economic reality says or tell us from it, that's what you are going to record. I hope you get that. Good. So now let's see. Let me do this. Let's assume that you buy motor vehicle. Yes, you bought a motor vehicle at a cost of 50,000. Instantly you pay. They've given you the motor vehicle. What happened? Let's see the legal form. We brought the motor vehicle to our company. Legally, who owes the asset? Okay, legally we owe the asset. So there's what? Ownership. Good. When there's ownership, meaning we have to what? Record. Wow. Now let's see. Economic reality. In fact, who will use the asset? Who controls the asset now? Oh, it says we control the asset. We control the asset. Or we enjoy the economic benefits. Oh yes, economic benefits. You are going to enjoy the economic benefits. And once these two are there, then we can also record it. That's the substance form. So here there's no confusion. The legal and then the economic reality of the transaction are the same. So there's no difference. But this is not going to happen for certain transactions. Some of the transaction, the economic reality will be different from the substance form. So take notes for me and then you'll be fine. Okay, so now let's do this. Let me clean it and then start with the examples of transactions that their economic reality is materially different from what? The legal form. So take note. The very first one is the finance lease or leases. Finance lease. Finance lease. So lease, where we want to use a piece of assets or equipment that we don't have the outright money or fiscal cash or instant amount, or we don't have the ability to pay or to acquire the asset instantly, but we can pay merely the annual rental. Assume that you want office building, a structure or permanent structure to use for your business operation. By when? And then they said that the cash price is the cash price is 800 million. That's Ghana cedis, 800 million Ghana cedis. You cannot afford 800 million Ghana cedis at a go or instant or outright purchase. No. But the owner said, okay, well, if you don't have physical cash, then I can rent it to you every year. Every year, pay me just 50,000 cedis. Just pay me 50,000 cedis every year. For let's say you are going to use it for 50 years. So pay me 50,000 cedis for 50 years. Good, for 50 years. So that's the lease. So we are going to now, in the form of like long rent, we're going to lease the asset. Now let's analyze the legal and then the economic version of this transaction. Now legally, no ownership. No what? Ownership. We don't own the asset. No ownership. No ownership. Legally, no ownership. Now let's see the reality. The reality. Who is controlling this asset? Who controls the asset? Is it us or the legal owner? Good. It is us. We control the asset. That's good. So once we have control, so control is there. And then who enjoy the economic benefits? Yes, we are also going to enjoy the economic benefit. Economic benefit. We'll move to us. Please, The economic benefit is not the money that we are paying to the owner. No, that's not the benefit you're talking about. The direct benefit of the building, where will it flow to? So we are occupying in the building, and the cash flows from the building is moving to our bank accounts, right? Oh yes, it's moving to our covers. So it means that we are enjoying directly the economic benefits. So that's why we have the right to record it. So once there's no ownership here, then meaning don't record. Don't what? Record. But once economic benefits move to us, we enjoy it, then you have to what? Record. Wow. So such a transaction is what? It's called substance over form transaction, where the economic reality is different from what? The physical or the legal form. So what do we do? So what are you going to do? So assuming that you are the accountant and are recording such transaction, are you going to record it in your book as an asset? Are you going to show assets? So here say record assets. Oh yes, record the assets. And here don't record assets. So what are you going to do? Yes, record. Whatever the substance say should outweigh or should over the form. So that's what we call it, substance over the form. The requirement of the substance should supersede the requirement of the form. The form is the legal form or the physical state or the package, how the transaction took place. How we get it? Good. How the transaction took place doesn't matter than the actual content. Please, if you want to report on legal matters, wait, when you go to the court, that one you provide full legal details. But in accounting books, we report on economic reality because we have to make sure that the financial statement prepared should represent the economic stance of the entity. So that make it faithful presentation. Good. So that is it. So that's the first example. So in the books, they have to record it because the substance should supersede the legal form. Now, another example, I'll give you 4, and please try and then look for 1 and add it to making 5 for me. Thank you. Now, I'll go to high pitches. High pitches. High pitches is similar to finance lease. Here, you will rent an asset or you hire an asset for some period before you purchase it. So that's high pitches. Good. That's high purchase agreement. Now here, you want an asset. Still, the asset is 800 million. You don't have physical cash, 800 million Ghana cedis, but you need the assets. So the owner will tell you, okay, now pay 100 million instantly. So initial amount or deposit. Make a deposit of what? 100 million. And then the remaining 700 Ghana, take your time and pay it, probably spread it over 50 years. So spread it over what? Over 50 years. So every year, come and give me part of it. Every year, come and give me part of it. Don't forget that they will probably strike interest on it. Now the issue is that if you fail to pay for any of the installments, the owner will come for the asset from you, and whatever you've paid vanish. Oh yes, because you are using the asset. They will give you the asset. Once you are using the asset, you are paying for it. So it means that the asset is not yours until you finish paying all the installments. Thank you. So until the 50 years is over and you've paid all the installments, now the asset is yours. How we get that? Good. So that is it. So now, assuming that we are within the 50 years, we are within what? The 50 years. And then we are still paying the installment. Is the asset for us? Now tell me. Within that period, is the asset for us? No. So still no ownership. No what? Ownership. So don't record. Oh yes. But let's see, who enjoyed the assets? Who is using it? So economic benefit is moving here. We control the asset. The asset is in our book. So control is still there. Economic benefit is also what? There. So therefore, we have to record an asset. We call it high purchase asset. So we have to record asset. I hope you get that. Thank you. I like that. Okay. Now, so tell me, what will you do? Whatever the substance issue supersedes, so here you have to record asset in our book. So high purchase, have to record it. So that's example what? 1, example 2. Now let's see if you can do example 3. Good. Let me take this session off and do the example 3 here. Now be with me for an example 3. It's interesting. Example 3 is what? Interesting. Example 3 is interesting. So all the transaction, please check the legal status and check the economic reality. Now, call it sale and repurchase agreement. Repurchase agreement. It's an agreement too. Oh yes. Yeah, this is how the transaction look like. Assuming that we need money. We need what? Money to go and then pay for some goods or clear some goods or to do something urgent. We need money instantly. But that money, if we say we should probably call our bankers, they may probably delay us or bring certain issues that may probably delay. We need the money urgent. Or even our loan capacity, we have exceeded our loan capacity, so we can't go for additional loan. So what do we do? Okay, we can't go for additional direct loan. So what do we do? Now let's treat a smart way here. Or let's find a smart way of getting the money that we need quickly. Now, so what we do is this. We have some goods that we sell. We have some goods. Some of the goods, they are very valuable ones. So normally when we come, we select them and put them aside and sell the 40 ones. So, oh yes, even it's happened. Fisherman, farmers, when they come back from the fishing, what they do is this. They will select the bigger one. Yes, they will select the bigger one, sell it, and they will come and then eat the small one. Yes. Oh yeah, they will sell the bigger ones and come and eat the small one. But here it's not like that. Here we are going to preserve the bigger ones for higher price in future period. So what we do is this. We have a nice goods or nice inventory there or nice asset. Good. Nice what? Asset. Preferably inventory. So we will sell it. Sell at what? Let us know, I'm going to sell this one at 50 million. Because we need 50 million. That's the money that we want. We need 50 million today. But these goods, we need them back. So we will sell it to someone 50 million and then later buy it. We buy it after 3 months. That is sale and repurchase. So I'm going to buy these goods again from you after 3 months for, let's say, 65 Ghana cedis. Oh yes, 65 Ghana cedis after the 3 months. Then I'll tell you that, okay, on condition that you are going to keep the goods for me. Oh yes, keep the goods for me. If you do that, I'll pay you a keeping fee, which is the monthly charge of, that's 1 million. So each month I'll pay you 1 million for keeping the goods for me. So that's the keeping fee. So now this is the illustration. Now tell me tell me the legal form. Explain the legal version of this transaction and then explain the economic version. So legally, let's see. Legally, is there any sale? Oh yes, there is sales. So legally, yes, there is sales. So yes, there is what? Sales. Sales has been made. Why? Because property in goods has been what? Passed. Why? Because property in goods. You've delivered the goods to the person. You've taken the money. Legal title has moved to the person. You are no longer the owner of these goods until the 3 months later you purchase them, right? Good. So legally, yes, there is sales because at the inception of the transaction, at the inception of transaction or at the 3-month period, yeah, there'll be sales. So as soon as the transaction took place, please don't forget that we are recording. You want to see how you should record a transaction at the day 1. So this is a day 0, and this is where the transaction took place. And this is a 3 months later. So we are saying that so day 1, where the transaction took place, how should you record it? Because you don't wait for the transaction to occur after some years back before you record the transaction. No. So when the guy gave us the 50 million, how should you record the 50 million? That's it. Can you record the 50 million as sales because we sold inventory and the guy gave us money? Please, that's how we want the explanation should be. Okay, not like after the 3 months. If you are going to record it after the 3 months, and there's no sales because you bought the item back, so it become purchases. But you're looking for it for now when the transaction took place. Is there any sales? Oh yes, legally there was sales. Yes, legally there will be what? Sales. Not there will be sales legally. Why? Because we have passed on the goods to the buyer. Just that we've stipulated that go and keep it safe, because when you come and then there's a measurement, we will not pay you the charges. So that is it. So legally, yes, there's a sale because day 1, the goods will be moved to the buyer's place, and then the legal title will be also passed. So that's the property in goods. That's the sale of goods what at. So for those who have done sale of goods at, yes, it will help you here. Good. Now let's go to the economic reality. Economic reality, the actual, the substance, the content. So this one, is it a sale? Now tell me, actual, is it a sale? Like after the 3 months, what do you think will happen? You still have the goods back in your premises, right? How can you sell something and then after 3 months you should possess the same item? I'm asking, if you're not a thief or a magician, who are you? Though you have what? Though you are going to buy it, but how can you sell the same item and buy the same item back again to your premises? So that's what in actual sense, not sale. So in actual sale, no sale. No sale. Oh yes, no sales. Yes. No sales because the goods after 3 months will still be yours. So no sales. But what is it? If there's no sale, then what is it? Who can tell me? Oh yes, try. If there's no sales, then what is it? It is what? A loan. You've taken what? Loan. Oh yes, you've taken a loan from that person. You've taken a loan of 50 million. Then the redemption value, redeemable, not at par, redeemable at what? 65 cedis. That's the repayment amount. With interest charges of what? 1 million per month. So every month you are giving them 1 million, and then I don't know, the 3rd month you are going to redeem the 65. You are going to pay back 65 to redeem your assets. Using your inventory as collateral. Using what? Your inventory as what? As a security. Good, as a security. So that is it. So that's the substance over form. So here you have to record what? You have to record sale. You don't need to, you have to record loan. You have to record your loan, no sale. Though the legal form say we should record sales. No, you won't know that. So take note for me. So in exams, 2 things will happen. 1, we give you the transaction and we thought that it has been recorded wrongly. They've recorded it as sales. What do? Reverse all and then record it as loan. So record all this as loan, and then the finance charge is 1 million. So that is it. So whatever the substance says should supersede the legal requirement, and that makes it substance over form. And that makes it substance over form. So take note for me. Okay, good. So now let's move on. Let's move on. So that is it. Now I'm going to do my last example. My last example of the day. That's example 4. Then please Try and then add at least either add one. I'm not expecting plenty items. Add one. Okay, so the other session is that they will not record it. So we are going to record everything afresh. So that one, what do? You record alone at start. Okay, so that's it. That's the second aspect. I mentioned two. Okay, so group account or consolidation. Group what? Account. Group account. Group account. That's a consolidation. So consolidation, when company acquires a company. Oh yes. When you own a company. So let's draw some small group structure here. Very simple and not complex. So company A acquires company, let's say B. Company A has, let's say, 60% shares. It has acquired the 60% of equity shares. So these two companies, it can be more. It can be this one to acquire another C, this one to acquire another one. In fact, acquiring plenty. But I want things to make easy for you and for myself. And when writing exams, to make sure that things make easy for you. So company A acquired company B. Good. Now, at the end of the year, at the end of each year, company A will prepare a separate account. So the financial statement, the P&L. So P&L and then balance sheet, or the financial statement, the balance sheet, separately. Good. Then they will put it together as a group because company A and company B, they are in a single economic entity. So let's see the legal version and then the substance version. In fact, legally there's no group. No what? No group. Oh yes, no group. Oh yes, legally there's no group. No group exists. Or physically there's no group. Physically, do you have a group premises? A group premises? Oh yes. No, physically there's no group premises. So take note. Yes. A subsequent lecture, I will explain Ghanaian type of group to you. Okay. Now, why am I saying there's no group legally? When you're going to register your company, did you go the same day? Okay, that's the first question. Second, or the most important one, you register your business alone and your certificate was given to you individually. Just that this guy have been able to acquire majority shares in your company. So that make him owner of your company. How we get that? So that is it. So legally, all of the companies or all of the subsidiaries, including the parents, they register their business individually and then they're giving their certificate individual or object. Good. Then there was a branch. There's a branch and then permanent establishment or extension. So that one is different from a group. So take note. Don't confuse yourself with extension or branch or permanent establishment. Probably if you're operating in Ghana, you can go to that of let's assume that you're operating in, let's say, Ghana, one region, central region. You can have a branch in what? Eastern region and other regions. That does not make it a group. Or you can have a permanent establishment in other places. Or you can have the same business operating in other places. That does not make it a group. I hope you know that. Good. So legally, there's no group because we don't give a certificate on group of companies. No. We give it to individual companies and you operate individually. Your objects are different. Now let's go to the economic reality. Now, so when you even define group, so the group, they are combination of companies, that's the parent and then subsidiaries, and where the accounts are prepared as if they are what? Single economic unit. Single economic unit. The economic reality of group is that yes, there was group. Yes, there was what? Group. Why? Because Don't tell us they belong to the same group, because they belong to single economic unit. They belong to what? Single economic unit. Oh yes, what do you mean by that? This owner, this company have bought majority shares of this. So in effect, economically, this guy owes this, and then it means the ownership. If you owe B and B have a prayer account, then you can add whatever B have to yours. That should be one. And they said the two shall be what? One. The two shall be one. So these two, they shall be one. If ownership is there, if ownership is what? Is there. If control is there. So take note. So single economic units. Please don't go and quote the two shall be one accounting. So take note for me. So that is. So that's why we have consolidation. So that's why we have what? Consolidation. Consolidation. That's why we have consolidation. So take note. That's why we have consolidation. Okay. Now let's look at this. Now let's look at this. Now you know substance over form and you know the examples of them. So kindly look for one more and then add it to it for me. Now, what is the importance of substance over form? The importance of substance over form is that it helps entity to report faithfully. So anytime the examiner asks you to explain substance over form, meaning he's asking you indirectly faithful presentation, because the importance to improve faithfulness of an account, the transaction should be reported on their substance, but not the form. So that is it. Anytime they ask you substance over form, they're just asking you for importance of what? Faithful presentation, and then you are fine. So thank you. Okay, now be with me. I'm going to walk you through some of the selected exam questions on substance over form. Please, the questions are not straightforward, extremely tricky, and anytime they ask you substance over form, please remember faithful representation, because they move together. Thank you. So now be with me. Now I'll pick just one question from ICA November 2018. So if you have your paper there, now you can be with me. Let's go to ICA November 2018. ICA November 2018. Good. So welcome to ICA November 2018. So ICA November 2018. So that's question 5B. So this is question 5B. Question 5B. So let me put it here. Question 5B. So question 5B. So take notes for me. Question 5B. Good. Now let's read a question. Please pay attention to this question solving section so that you can get it. I'll probably tell you the origin or the source of this question. So take note and be with me and you'll be fine. So under the IASB conceptual framework for financial reporting, so let me start again. Under the IASB conceptual framework for financial reporting, certain qualitative characteristics of useful financial information are identified. These are subdivided into characteristics considered to be fundamental and those considered to be what? Enhancing. Two fundamental characteristics that we mentioned under the conceptual framework part 1. So please, if you don't have it, can go for it and then you'll be fine and you'll be saved there. Okay. So the two fundamental qualitative characteristics identified by the framework are relevance and faithful presentation. In order for transaction to be represented faithfully in the financial statement, the principle of substance over form should be applied. So this means that whether there is difference between legal form of a transaction and economic substance, The financial statement should reflect the economic or substance. So question 1, discuss the importance of the concept of what? Substance over form. So important of substance over form. Important of what? Substance over form. So now be with me. Now let's go to the board. Let's go to the board. Importance of substance over form. So, okay, so we said that it improves what? Faithfulness of accounts. So it improves faithful presentation. So the first important I'll talk about is what? It improves. To improve what? Faithful representation. Presentation. Good. Can you talk about any other? Good. I like that point. Also said that it will let us see the actual version of the transaction or the substance of the transaction. So if we report on the substance, it will let us know the economic status of the transaction. I hope you get that one. Okay, that's good. So so that is it. So in short, in fact, it represents or it depicts the true picture of the transaction. So it just depicts or it shows or it reflects. So it would reflect the true picture or the true nature of the transaction. So the true nature of what? Transaction. Because we said that that's the actual. Don't forget that I wrote actual there for you. So actual. So you show the actual transaction, the actual form. So that is it. Good. Now be with me. Now let's go. Let me give you 3 points. Substance over form. The importance of substance over form. Okay, so we said that it will help us to report faithfully. And then the substance over form itself is important. It's important. Why? Because in accounting transactions, most of the transactions that we record or in accounting, we report on the what? The substance. So it is important for us also report on what? The substance version. And then important. So that is it. Good. So we are saying the substance over form is important. Substance is what? More. It's more important. Why is it more important? Yes, in accounting books, we like the substance, but not the form. So substance is very important to us than the form. That's what I'm saying. So these are the importance of the substance of a form. And this is your paper, ICA November 2018, question 5B. So you can quickly turn there, then see it. Now there was a B part of the question. There's a B part of the question. Now be with me and then let's see the B parts of the question. The B parts of the question. So the B part of the question says that describe 4 features of transaction that suggest that its economic substance may what? Differ from its legal form. Okay, so for this question is a bit tricky. So now be with me. The question is a bit what? Tricky. They're asking you that how do you know? How do you know that yes, this transaction, its legal form is what? Materially different from what? The substance version. Take note of that. I'll take it again. So this question is a bit tricky. It's like this. How do you know? Because I set an example. All my 4 examples, they are the one that you are going to use as the answers. First of all, we said the finance lease. So if you pick finance lease, how do you know that finance lease is a substance over form? So that's what we are looking for. How do you know that finance lease is a substance over form? Now, finance lease is a substance over form because how? I detected that the legality of the transaction is materially different from what? The substance. Why? Because ownership and then control are in different hands. Ownership and control are in what? Different hands. So that is it. Ownership and control. Good. So what they are different. So anytime ownership and then the control of an asset, they are in different hands. Or you have an asset, either we control, different person owns it, then that it may indicate or it may suggest that the substance over form. Then quickly you analyze that. So that's my first point. So take note. This bit is a bit tricky. So that's my first point. And then move on to the second point. And the second point is where, and I write them down. So indication of substance over form. Indication of substance over form. So indication number one, where ownership of an asset. An asset is what? Differ or is different from the economic benefits or different from its control. Oh yes, different from its control. Good. I'll go to the second point. The second point will be where assets are priced or they are sold below or above the fair values. So where selling price of assets are what? Either above or below. Oh yes, I'll explain to you. Below what? Their fair value. Their fair value. So, for instance, the example that I gave with that of high purchase agreement. If you take high purchase agreement, in fact, the price at which they are quoting is not the fair value. They'll tell you, okay, if the cash price is like this, if you have cash price, that's the fair value of the assets, is 1,000 Ghana cedis. But because you don't have 1,000 Ghana deposit, pay 200 Ghana and pay me annually. Annual payment of, let's say, 300 Ghana cedis for 4 years. So that will give me 1,200. So if I should put all of them together, I'll get something like 1,400. Wow. So the price that I'm selling this is at what? 1,004. Meanwhile, the cash price is what? 1,000 Ghana cedis. So basically, there was a what? Difference between the price stated and then the fair value of the asset. That's a high purchase agreement in that situation. Or you can also use the inventory as also an example. Inventory. I sold the inventory to you, or I sell my inventory for 1,000 Ghana cedis. Meanwhile, the price of the inventory was actually 1,004. So that induces you. So take notes of it. Good. Now let me give the second example. Well, have you seen the inventory? Say I sold or I sell my goods at 50 million. The example that we use, I think our third example under the substance of a form. Then I bought it from you at what? 65 million. Let's assume that the market value of these goods is what? 70 million. Wow. Because I am in cash trap, I'll be forced to sell an item that cost me 70 million to you at what? 50 million. Yes, so there's an indication, please. It does not suggest that anytime I sell my asset to you at the least price or higher, it means that the substance over form. No, it's an indication, may suggest. So let me lead you to a question, because this question is very highly slippery. I'll tell you the origin of the question. Sorry, I'll tell you the origin of the question. So that is it. Where is it? Where is it? Where is it? Good. I'll tell you the origin of the question. Now, this is it. Good. It said describe 4 features of transaction that suggest to. Okay. So I'll tell you the origin. The origin is may. So that is it. Good. So there's an indication that substance over form may take place. Then let's go to the third point. Third indication. Third what? Indication. Third indication. Good. So third indication, where there are a lot of several links. Several links to the transaction. Like you are selling to this, like A to that of B, B to that of C, and then C to that of, let's say, D. And then you know where we are heading towards, right? We're heading towards a group account where there are several links between these entities that are selling the goods, or probably related party transactions. When they come together, they are one. But when they spread themselves, they are not one. Okay, so where there are several links in a transaction. And finally, this is what the group account, right? So let's go to the fourth one, where there are options in agreement. Oh yes, options or agreements. There are options in agreement, or there are options and agreement. Example is the sale and lease back. Sale and lease back. So sale and what? Lease back transaction. Here I will sell the item to you, but I have the option to lease it back. Or I will sell or sell. Good. Let's make it sell and repurchase agreement. Repurchase agreement. Okay, so sell and repurchase agreement. This one too. There's an option. I will sell the goods to you, and then I have an option to purchase the goods back. So that is it. So where there are options, several options or alternative, it may indicate that there is substance over form, or there's an indication that the substance of that transaction is materially different from the legal form. Now be with me, let me go to the important section. Then let's see. I have another question for you. Please, that's the origin. Sorry. I might open this question always. So let me see. Okay. Yes, I want to share this. Now let's see the next question. Now look at the next question. An important aspect of international, that's ACCA June 2010 exam. This one is ACCA June 2010. The one that we saw first is what? 2018. That's ICA 2018 November. So this one is question 4. This one is question 4, June 2010 ACCA. So for those of you writing ACCA, you can then check for yourself. So it's not only ICA that bring the tricky questions. So ACCA also does that. So take note. An important aspect of International Accounting Standard Board ISB framework for the preparation and presentation of financial statements is that transactions should be recorded on basis of their substance over their form. I like that. Now, let's see something here. So explain why it is important that financial statements should reflect the substance of the underlying transaction. So we are just asking you What is the importance of the substance over form? That's the same as the previous question, right? Good news. And then describe the features that may indicate, I like how the examiner put it, may, not should. So here to describe 4 features of transaction that suggest that, so that may suggest, have you seen? Good. So I'm just showing you the original version versus what? A copied version. Okay, thank you. Now be with me. That may indicate that the substance of the transaction may differ from its legal form. And that's what you see here. Good news. So that's it. Now be with me in the subsequent lectures, and then I will probably walk you through more of this and then show you the techniques that you should go through how to pass your exams once and for all. Thank you very much for watching. Kindly don't forget to subscribe to our page and then share the links to your friends and then any other person that you feel like it may be of help. Yes. Can if you have any question, suggestion, kindly put it in the comment box, or you can follow us or push the question to our mail. You can put the question to our mail. So the mail will be like this. You can put the question to the mail. So this is the mail. This is the mail. The mail is info.targets.gh at gmail.com at what? gmail.com. So take note. That's the mail. You can push it through, or you can also push it through my personal mail. That's Frederick Blee, that's JBLI at gmail.com. Gmail.com. So these are the mails that you can probably forward your question, comment, any material that you need, and then we will probably push it to you. Thank you very much for watching once again. Bye. Then have a nice day and stay safe from coronavirus. Please observe all the social distance protocols. Okay. See you the next lecture. The next lecture will be regulatory framework of financial reporting. Thank you.